Yeah, I think the question is that you can get a big market rally and you can even have it last a couple of months or a few months. But what does all this really mean for the real economy? And there we first of all don't have a lot of specifics. But what we have today tells us that it's going to likely do precious little to juice economic growth. I think it's going to do a fair amount to put a floor under the economy. We are probably going to get Beijing hitting its, close to its GDP target of about 5%. It's good news, I think, cyclically for the property market. But beyond that, what happens to the household sector? We have absolutely no concrete measures being announced there. So I think it doesn't do much in terms of lifting economic growth too much higher from that rough target they've laid out this year.
What do you make of this easing up on things for the stock market and being able to tap the PBOC for a lending facility to put back into capital markets, which should be good for things like tech names? Because rewinding the clock to a few years ago, and really President Xi Jinping seemed to have crushed the animal spirits of a lot of these guys in the private sector, entrepreneurs, and a lot of these tech companies, which did wipe out a lot of money off the stock market. But I heard Bill Bishop, who sits stateside as well over in DC, talking about this, a sort of renowned China watcher, who said that maybe they're starting to come around to the idea that maybe that was a little bit of a mistake, and they're starting to fine-tune the way that they look at this now.
I think on the policy regulation side, Chinese policymakers are absolutely figuring out the right way to go about regulating their companies. But a lot of it is political, right? Baba got too big. Jack Ma got too big politically from that standpoint and had to be cut down to size. As far as broader support measures for the equity market are concerned, again, I think this is about avoiding sort of that doom loop of confidence. You don't want bad sentiment, building upon bad sentiment and going down, that downward spiral. It's about avoiding that. And it's about creating a structure, so that you can support equity markets when major sell-offs do take place. You have the national team step in all the time. I think this is yet another measure to do it in a more concrete and uniform manner. Doesn't fundamentally change the fact that at the end of the day, the Communist Party is not concerned about just the equity market per se. They have much bigger concerns. They have national security concerns. They have concerns about economic vitality and stability and independence from Western nations, especially the United States. But they've created a mechanism to, again, make sure they put a floor under the markets if there is sort of that big sell-off moment that takes place in the future.
Indeed, Shehzad, and you scratched a very important point, which is about how there have been timely interventions by policymakers to shore up and support the economy. It hasn't been as pronounced and as big, bazooka-like for market participants, investors, economists to take note of. So in that sense, this time is being seen as different. But I wonder if there's a political angle to this story, if the market, in anticipation of a Harris administration, thinks that things would be looking up for China and the election risk for China is limited, which is why this time around the reaction has been more pronounced.
Yeah, look, they're treating it as if it were a liquidity problem, and that in itself is not the right approach if you talk about what ails the Chinese economy, which is fundamentally that they need to transition structurally from this industrial, led economy, manufacturing-led economy to something that's led by the household sector, by consumers. But they're not doing that. They're doubling down on the manufacturing side. And that's where the geopolitics of it gets really, really interesting. Because if you get a Trump presidency in place, it seems like they're putting in measures today by recapitalizing the banks, by making all this money available to continue supporting the sectors that are going to most likely come under attack. As you know, it will be by and large their manufacturing sector that's going to come under a lot of pressure under a Trump presidency. And really, even if there's a Harris presidency, we do see the likelihood of tariffs, fresh tariffs coming out. So I think it's creating a little bit of a buffer to support the industrial economy and what's going to be, I think, a geopolitically tumultuous several years now.